Hello and welcome to A Brief Account. I'm joined today by Neil Smith, a partner in our insolvency team, to talk about key issues facing insolvency practitioners. This is intended to be a bite-sized discussion today, talking about the hot topics facing practitioners. I'll let Neil introduce himself in a moment, but briefly a little bit about myself. My name's Alexa Jones and I'm a Principal Associate in the Insurance Disputes team at Mills and Reeve. I defend claims against professionals, including insolvency practitioners. I often work with colleagues around the firm who have specialist knowledge when defending claims. Colleagues like Neil. We work together to better understand the technical issues surrounding liability and to formulate a strategy for dealing with a claim. And that strategy can sometimes involve taking rectification steps, dealing with technical issues that need to be resolved, that sort of thing. Neil, if you'd like to say a little bit about yourself.
Thanks, Alexa. Yes, Neil Smith. I'm a partner here at Mills and Reeve. I'm also national head of our restructuring group. So I act on all aspects of financial distress, whether they affect companies or stakeholders or people who are owed money. I also act for the insolvency practitioners that you mentioned themselves, and therefore I act on the sales in relation to litigation that they bring, and as you say, obviously assist you guys on claims that we act for. In relation to insolvency practitioners, trying to bring my experience of kind of at the coalface action to help in relation to the defending of those claims.
Thanks, Neil. So let's start with negligent administrations. I'm seeing an increasing number of claims around alleged negligent administrations. Are you able to explain why we might be seeing claims against administrators that are framed in this way?
Yeah, I think most claims against administrators probably fall into two categories, either to do with the sale of the assets, or to do with, doing something that they shouldn't have done, or less likely doing or not doing something they should have done. In relation to the sales, there is a propensity now in relation to administration that those administrations would be what are called prepackaged administrations. So what that means is that the administrators are looking to be appointed very much at the last minute once the purchaser is lined up, and then are selling to that purchaser, who then takes on day one at the administration and has the expense of running the business going forward. The advantages for the administrator are that is obviously cheaper and quicker for them and creditors. From the administrator's perspective, the disadvantage is that generally those deals get done at breakneck speed because there is a pressure on the company to go into an insolvency process and be sold. It can't pay the wages, whatever the pressure is, supplier is pushing. So as opposed to your archetypal administration where you trade for a period of time, find a buyer and then sell, you're probably running at much quicker speed. And as that is now the kind of prevalent way that administrations are dealt with, that's probably one of the reasons that you're seeing an increase in sales, because where you have interested parties, inevitably only one party can win. We've seen various decisions over the last couple of years where claims have been brought against administrators for going with one party as opposed to another, with the other party claiming, oh, I would have paid more if you give them time, etc. And also arguments around valuations of assets, etc.
Yeah.
So that would certainly be one.
Yeah, that's something definitely I've got experience of. The litigation against the professional is used as a tool to apply pressure on them, perhaps as part of that ongoing bidding process, or even the bidding process has been and gone.
Yes, absolutely. It's a tactic that's used all the time to try and put pressure on to accept one bid over the other. And the administrators are in a difficult position there. They've got to act in the best interest of creditors. They have a lot of people saying, yes, I can give you more money, I just need more time. Time, unfortunately, is a luxury that they generally don't have.
Yeah. Well, moving on, another point that often comes up in my area of practice and something that I often have to help insureds navigate, the point around sort of conflicts of interest that can arise. Do you have experience of that, Neil?
Yes, I mean, it is difficult for administrators because they are often brought into situations by stakeholders, so often secured creditors, if not the company itself. And particularly as we've seen with secured creditors, and they are less likely to be kind of high street clearing banks that they might have been 10, 15 years ago. They're more likely to be funds, private equity, various investors who have put money in either by equity or debt. and are looking to appoint administrators and possibly using that process to buy the
Mm.
business back out, that is giving more and more challenges to insolvency practitioners in balancing their duties against those that put them in office, and those that actually, they owe their duty to, being the creators of the company. And we've certainly seen with cases like Silent Night, where those
Yeah.
conflicts have resulted in quite serious penalties levied on firms. We've also seen decisions where that closeness between insolvency practitioner and lender has led to allegations which generally have been unsuccessfully pursued, that the administrator has not been, acting in the best interest of creators of the company, and has allowed themselves to be influenced by those third parties. It's very rare, particularly in larger insolvency practitioners, that you have a bilateral right. I'm acting for the company, and there's no one else here who I need to listen to. Secured lenders will have priority in relation to their returns. They will be approving fees, and therefore it's quite a minefield for insolvency practitioners to steer through. Similar to the purchasing point, that a number of different parties that they have to all keep happy at the same time.
And we've seen a lot of the larger practices carving out their restructuring teams and demerging. I imagine that's all part and parcel of this, is it, Neil?
It is. I mean, that's a slightly different aspect of conflicts, which is that,
Yeah.
that there are various conflicts for the accountancy firms in being able to act for audit clients. So historically, a lot of restructuring work for the bigger firms would have come from audit practices, whether that be tax, restructuring, or anything else. And as the rules have tightened over the years, in effect now it is very difficult for restructuring professionals to act on behalf of audit clients. And in addition to that, if an audit client is involved, they are conflicted from acting from other
Mm.
parties as well. So you have seen two firms, KPMG and Deloitte, their restructuring teams break out and be bought by private equity, setting up as Interpath, Teneo respectively, to launch into the market without those conflict issues that they would have as a Big Four accountant.
Yeah. So I think another point I've got on my list of things we could talk about today is around, and we've touched on it already, valuation of assets and claims from work arising from that. Do you have anything interesting to add?
Yeah, I think the obvious point for insolvency practitioners and their lawyers as well is that they are not valuers. And the challenge for administrators, as I say, is that, in an ideal situation, you have a bidding war, you have more than one interested party, which hopefully pushes up the price.
Mm.
But then, you've got to select between at least two parties in those circumstances, and one is going to be unhappy. And often arguments ensue, as we've seen from various recent decisions, as to whether proper price was obtained for an asset. That the insolvency practitioners go to is to look to a valuer to assist them, whether that be in relation to real estate or any other asset, and get a valuation that supports the offer that they have received. But that is an obvious point that insolvency practitioners should be doing, but often in the maelstrom of what they are involved in, sometimes these things can be overlooked or
Yeah, and imagine,
valuations used, and that's where you get into difficulty.
I imagine sort of looking at retainers and the scope of those retainers is quite critical when you're looking at defending matters
Yes,
surrounding valuation issues.
absolutely. But normally the insolvency practitioner would look to get a valuation of the asset that they are selling. One form of valuation is obviously, the amount someone's prepared to pay for something in the open market. So if you have
Yeah,
more than one interested party, that is a start, but it's obviously not the end. And ultimately, what, for example, an administrator needs to bear in mind is that if they can't get a price above a certain level, then does that actually justify an administration? Or is it in fact a liquidation where the assets need to be sold off on a
yeah.
piecemeal basis? So that's about that valuation issue to be considered as well.
So, what's next for the world of insolvency practitioners? We are going into sort of turbulent times when we look at the economy around us. The current economic climate is looking pretty bleak. It's probably going to lead to more corporate insolvencies. Are we going to see an uptick in claims as that will correlate with that? Do you think, Neil?
Yeah, I think so. I think there will be more administrations. The vast majority of those administrations will be pre-packs, therefore there will be more sales. And to the extent that there are bidding parties, there are going to be more disappointed entities who may or may not choose to pursue claims against insolvency practitioners. One area of my sector that has grown a lot over the last few years is litigation funding, and parties
Mm.
prepared to fund claims against insolvency practitioners because, of course, they are insured in the main and regulated, and so there are various pressures that can be brought to bear with probably the party with the deepest pockets in the vicinity, and liquidators, other insolvency practitioners and lawyers are much more prepared to work on a no-win, no-fee basis with these funders, or alternatively the funders will take an assignment of the claim themselves, and therefore that's been a massive growth market, and a lot of that growth has been focused at bringing claims against insolvency practitioners. Having said that, a lot of those claims are brought, I think, to bring commercial pressure to bear rather than based purely on the merits, because the vast majority of the claims that do go to trial are unsuccessful. The courts recognise that insolvency practitioners are officers of the court and are regulated, and therefore they will need some convincing that those insolvency practitioners have actually done something wrong in the first place.
That's right. And just to wrap up, just to finish, do you have any final thoughts about how insolvency practitioners can guard themselves against claims, be they have merit or otherwise?
Well, we've talked about valuation evidence to support the values that insolvency practitioners are obtaining. I think the Force India decision, which was a claim against an administrator in relation to the Force India Formula One team, demonstrated that having some kind of written contemporaneous evidence in the usual way of correspondence with parties, as to what was exactly said, is the way forward. So as much as possible should be kept in writing. I mean, ideally that would be in attendance notes, but those are probably things that lawyers do more than accountants. But some email correspondence to back up the conversations that I had, because otherwise, if you're just having conversations, then you get into a question as to who said what to whom.
That's right.
And the courts would expect the insolvency practitioners as professionals to have notes of the conversations that they have had with interested parties.
It's difficult sometimes when you've got a very pacey administration you're dealing with, to keep up and to make sure you are recording all of those conversations, but it is just so important, isn't it?
Yeah, I mean, it's easy to say, but really, and as I say, a nice attendance note, which lawyers would recognise is not always necessarily achievable, but I think some kind of written record on a contemporaneous basis of what's going on could prove invaluable in relation to where the market is and where I think it will go over the next few months and years.
Well, lovely. Thank you ever so much for your time today, Neil. I think we'll wrap it up there.
Thanks, Alexa.
But just to finish up, if you have any questions or if indeed you need any help, please do not hesitate to get in touch with Neil or myself. Our contact details will be at the end of this recording. Thank you.